Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment, and that's Landon Swan. He's the co-founder of LikeFolio. Welcome to the show, Landon.
Hey guys, happy Monday.
Yeah, happy Monday to you. So we're talking Dick's Sporting Goods, right? This is right in square in the crosshairs of consumer discretionary. Shares are down 7% today, but I saw a lot of kids practicing baseball this weekend. It was about 65 degrees, 70 degrees on Saturday here in Chicago. It's snowing now, by the way, Landon, thanks. But there was a lot of kids out there. You know, this is one of those areas where the reopening trade, you don't even hear the word COVID that much anymore. What kind of data are you guys seeing in Dick's Sporting Goods?
Yeah, they're down a little bit today. I think a lot of it had to do with Hibbett. They've put in a pretty bad number, at least a bad reaction from the market. And of course, the market's down 2% now. But with Dick's, I think a 1.7 beta, so they shouldn't be down 5%. So there's something more there. I think it is Hibbett kind of overflowing a little bit into negative sentiment. So that could be an opportunity. I think that LikeFolio data is slightly bullish on Dick's. We got them as a plus 22 on our negative 100 to positive 100 scale. So slightly bullish, but pretty cautious there. And I think a lot of that has to do with, just like you talked about, kids are getting back out there. You're buying more sports supplies and things like that. I was actually in a Dick's last week, and I wanted to get a few basketballs. I coach basketball. I wanted to get a few, and I couldn't find the right size. They only had a couple of this. So there's definitely supply chain issues happening here. I think people are unable to spend sometimes on things that they want. This chart here, we're looking at consumer happiness, and you can see Dick's, DKS, right there kind of in the middle of these sort of comps, I guess. Not all these companies are sports retailers, but you get the idea of where they're at. They're doing well, but not fantastic. And, if you look at, for example, e-commerce, it's down 10% year over year. Mentions of it are down 10%, whereas shopping in the store is up 18% year over year. So we're coming out of COVID, and it shows in the data. It shows that people are getting back out there. And I think that kids' sports are one of the first things that are going to really ramp up to what the levels were in the past, because a lot of it is outdoors. You got the perception that it's safer. And so I think that, that's where the money's going to be spent. But the stock, like you said, it's getting beat up 5% today, 30% off all-time highs. The PE ratio is now down to an 8. We're seeing some really low PE ratios, at least compared to what we've seen in the past. So I would say that, again, we're cautiously bullish. I think they're being drugged down a little bit by a competitor who didn't have a fantastic report. There may be an opportunity, especially when you look at the expected move. It's around 11%. That's a huge move. It's already down. Now it's down 7% today. Wow, it's moved down since I looked at it 30 minutes ago.
Yeah.
So it's got a huge expected move, and I think that if you've got the gumption or the courage, you could have a good opportunity here to buy the dip. But it's always scary to try to catch that falling knife. But I would say we're slightly bullish going into this report.
Landon, if you're a sports enthusiast, you spend a lot of time in Dick's, and they're a very popular retailer in the Midwest, as you know, but they got some problems, right? You mentioned supply chain and inflation. That's going to affect some of their business. It sounds like they handled the supply chain in terms of inventories better than most, as they pre-ordered bigger groups. But Landon, I think there's a bigger problem here, and that is, you were mentioning Hibbett. I'm looking at Foot Locker and Nike's slow progression away from these retailers. Your chart on purchase intent versus sentiment, the three that are doing the best, Adidas, Lulu, and Nike, those are people that make their apparel, right? Dick's is a seller of their apparel. So all this direct to consumer, I think, is starting to take its toll on places like Dick's and Foot Locker and Hibbett. You're really starting to see that. So that's my concern. And just look at the numbers from Foot Locker. And by the way, if you look at my Thinkorswim platform, Tom, I laid Foot Locker's chart on top of Dick's Sporting Goods chart. And it's alarming in how correlated they are the last several months, and the chart is basically working its way lower. And then, if you remember, Foot Locker had a big miss about a week ago. So that's where my concern is, Landon. Are you seeing anything about Nike, clearly the biggest retailer in terms of sports apparel? Are they moving away from these retailers, and should we be concerned about that, Landon?
Yeah, so that's something that we've been talking about. That narrative has been playing out. It's usually Nike and Foot Locker that we've talked about, right? Because I think that Nike represents the largest part of Foot Locker's revenue. Dick's is a lot more spread out, but Nike is still a big part of their revenue. And it's not just Nike, like you talked about. A lot of these companies are moving away from going through retailers. They're going direct to consumer. That's technological innovation. It's the tale as old as time. It's going to continue to happen. And now you maybe don't need to have a store to show off your goods. You can go directly to the consumer. So this is the chart that you were talking about. To the right is where people are talking more about spending money with that company. To the left is less. Notice where Hibbett is. Up is happiness, and you want to be obviously higher on that. So Dick's is kind of right in the middle, but if you look at who's sort of beating them, up and to the right, Nike and Lulu going direct to the consumer and going around them. I wish we would have put Foot Locker on this chart. I'd love to see where they're at. I have a feeling they'd be down and to the left as well. And because, just like you said, it's going right around those. And this has been in the works for years. I mean, Nike has been talking about doing this. They've been ramping up their direct-to-consumer platform, their mobile platforms, all of that. The margins are just better, and their name is out there. It seems like used to be that the theory was that nobody's going to buy shoes or clothes if you can't look at them, touch them, feel them, try them on. But now I think people are getting more comfortable with that. They know their size in Nike, whatever it may be, and they're more comfortable ordering online, especially if you have a good return policy. And it's starting to put a little bit of pressure on these retailers. So I agree with you, Kevin. I think that is definitely the big concern with Dick's. I think they have a more diverse offering than what Foot Locker has. I think it's going to hit Foot Locker a little bit harder, but they're still going to be susceptible to the same problem.
Yeah, and if you look at a bunch of those brands that you had in comparison on consumer happiness with, Dick's Sporting Goods, they carry Nike, they carry Adidas, right? Deckers, I'm not sure. But if you look at that, and the adoption of their mobile app and their pickup at the store, right? That was a big thing for Walmart and Target, that people were just picking up everything curbside, right? And they're seeing some really good flow through on as far as traction with that. When you look at this company, they don't really have a peer. They've got smaller peers, like Foot Locker would be a small peer to Dick's Sporting Goods. I just don't see any comparison. Hibbett's a smaller chain. I've never been in a Hibbett, but is that the caveat that might make this a better quarter for Dick's Sporting Goods based on the fact that they're number one and they're bigger than everybody else in this space?
Yeah, I think they do have a bit of a unique advantage in that. If you need sporting goods supplies, pretty much you're going to Dick's. I mean, there's not a lot there. You can try like a Walmart or a Target, but you're not gonna get everything that you need. Whereas if you go to Dick's, you're gonna get it. But over time, that erosion is going to happen from Nike, from those suppliers, and it's going to be natural because when times are great, I think it would be easy for a company like Nike or Lulu to continue to go through retailers. No big deal. We're making a lot of money, but as times get a little bit tighter, you see all these issues that we're talking about: supply chain, inflation, all of that, even labor shortages. As you get those margins starting to contract a little bit, then you find ways to make more money, and you start asking yourself, well, why are we sending our products through these middlemen when we can sell it direct to consumer at a higher price? And as, like I said, as it gets a little tougher out there to make money, you're going to have innovation, and this is one of those things. So I am worried long-term for Dick's. I think that short-term, though, that we've got them, more up and to the right than what Hibbett's was. Of course, they're a much smaller sample size, so I don't have complete confidence in our data on that, but it is stronger than where they were. And so, again, cautiously bullish, and with the expected move as high as it is, there could be some room for selling some premium in here. I'd love to hear your guys' take on that.
Yeah, I mean, if you look at implied...
Landon,
go ahead.
Tom,
go ahead.
Let me give you one more field study that I did this weekend, Landon, that you will get a certain amount of pleasure out of. I just want you to know, we talk a lot about brick and mortar retail, right? And we do a lot of talking about going into Walmart versus online and all these companies. I just want you to know, Landon, 7 a.m. Saturday morning, I go into Walmart. Figure I'd run in and run out very early, almost got in a fight in Walmart at 7 a.m. on Saturday morning. Never again, Landon. There's my bit of field study. I'm now completely direct to consumer on everything.
That's amazing. And now you know why Walmart's happiness is so low. It's
yes.
It's a tough store to go into. Ordered online, it's fine. You go in there, a little shaky.
Yeah. We'll have to wait and see. That implied volatility, as you mentioned, Landon, expected a big move in here. Implied volatility at 52-week highs going into that report. But you guys are modestly positive on this. All right, great stuff as always, Landon. Have a great day.
All right, thanks a lot. Take care.
All right, that's Landon Swan, the co-founder of LikeFolio.